To put yourself in the best position to borrow money is really to understand how the lenders think. Hi, this is Daniel Eigenman for the Daniel Eigenman Broker Forum. I hope you are all doing well. And today I want to give you a bit of an insight into how the bank thinks and why it is important for you to understand that when you're selecting a home loan, whether it is to buy, construct, or refinance. It is important. Now, the last 2 years, the bank's behavior has been dictated mostly by what the regulators have introduced. For example, we had a couple of years ago, we've had an emphasis on investment loans where the regulators said there's way too many investment loans, it's too risky, they're driving their prices up, especially in Sydney and Melbourne. We've got to slow it down. So they basically put a cap on the growth of investment loans for all the lenders. And now then the lenders have taken that on board, and the banks are actually now under that requirement. So this is why you'll see some more investment loans and better rates being available. So then it was a focus on interest-only loans, where over 50% of all the loans that were written were interest-only, and the regulators looked at it and said this is way too risky. Why? Because when you're paying only interest, you're not paying down the loan amount. So if your prices, the property prices change, especially on the way down, you might find yourself with a loan that is higher than the property price. In other words, with some negative equity. So that's not something that you really want. But there are some good reasons to go and have an interest-only loan. But that's a story for another episode. Today, what I want to talk about is the latest, emphasis of regulators, and which is changing the bank's behavior, and that is on living expenses. Living expenses is pretty much what you spend on things like your house, if you're an owner occupied, or if you own some investment properties. It might be strata fees, it might be council rates, it might be the utilities as well, some repairs, maintenance, all of that will cost you. All right, so you need to understand how much it is costing you over the year and then over the month. And it's things like groceries, your phones, internet, Foxtel, Netflix, streaming services, going out, if you've got kids, school, maybe private school fees, insurance, what else is there? Things you spend on medical bills, and there's a lot of other things you need to think about. And it used to be that a few years ago, we always had that discussion with the clients about their living expenses, but we would really talk about it at the very macro level, pretty much in terms of how much do you spend on average per month. We might mention things about your groceries, your car, your insurance, and that was fine. At the time, that was absolutely fine. Because remember, the idea is to make sure that you can afford your loan. So you don't want to understate how much you spend on a monthly basis on your living expenses, on top of whatever other liabilities and commitments you might have. But now what the banks are being asked to do is to focus in more details in what an applicant's living expenses are. And there's been 2 banks this week who came out with a list of 13 different items in your living expenses. All right, so they want to know about your household expenses, they want to know about your groceries, they want to know about your entertainment, they want to know about your transport, they want to know about your insurances, going out, etc., etc. They really want to understand how much you're spending. But remember, they're all doing this to make sure that you can actually afford the loan that you're actually taking on. And what does that mean? That means that yes, you need to state how much your living expenses are, but the banks will also want to check that what you're saying is correct. So how do they do this? They've now started asking for copies of your credit card statement, of your bank statements, especially the statement where your income comes in and where most of your living expenses come out as well. So they want to have a way of checking from different sources what your living expenses are. All right, so what does that mean? As usual, like your credit file, you can't really hide from the banks. They will find out. And as I tell all my clients, let's have a good look at what your expenses are. If we need to make some changes, you know, in terms of your budget, we can look at that. Because remember, I mentioned that a few videos ago about budget, how important it is. You want to know what money's coming in, you want to know where the money's going. So if you need to review your cash flow, you know exactly what to look at. And it's also, if you're looking at saving some money to buy an investment property or your first home, you want to know what your budget is. You want to understand where the money is coming in, and more importantly, where the money is going out, so that you can make some adjustments if you want. But remember, what I wanted to talk to you about today is really about living expenses. The banks and the regulators are now looking at your living expenses at what they call a granular level. So they really want to know, they want to understand what your expenses are, because remember, it's all about being able to afford the loan. All right, it's a big commitment. You want to make sure you can afford a loan today as well as tomorrow. All right, thank you very much. Have a great week. If you've got any questions, as usual, leave your questions down in a post, or IM me directly. Thanks guys, see you next week. Bye. Hi David, how are you?